Hi, in this unit, Administrative Management 2, Taxation, we will see an introduction to the concept of taxation and the European tax policy framework, the components of taxation in Europe, including direct and indirect taxation, and the effects of double taxation, and finally, the different types of taxes in Europe. By tax, we understand a compulsory contribution to the state revenue levied by the government on workers' income and business profits, or added to the cost of some goods, services, and transactions. With this idea, the European Union needs a robust, efficient, and fair business tax framework that supports all the businesses' activities, removes obstacles to cross-border investment, and creates an environment leading to fair and sustainable growth, with targeted measures that promote productive activities and entrepreneurship and ensure effective taxation. In this sense, direct taxation remains the sole responsibility of member states, whereas indirect taxation affects free movement of goods and the freedom to provide services in the single market. In fact, a direct tax is a tax that is directly paid to the authority imposing the tax. While direct taxes are imposed on income and profits, indirect taxes are levied on goods and services. A major difference is that the fact that the direct taxes are directly paid to the government, but indirect taxes are generally paid through an intermediary for collecting indirect taxes from the end consumer. It is then the responsibility of the intermediary to pass on the received tax to the government. One of the issues a taxpayer could have when operating in more than one country is double taxation, as in some business scenarios, taxpayers will always be subject to the tax rules of their country of residence, and they may also have to pay taxes in another country. Fortunately, most countries have double taxation treaties, which generally prevent you from being taxed twice. In the European scene, we can find the following types of taxes: corporate tax, which is a tax levied on the net income of a company; income tax, which is a tax levied directly on personal income; value added tax, VAT, which is a tax levied on the amount by which the value of an article has been increased at each stage of its production or distribution; excise tax, which is a tax levied on various specific goods, services, and activities; social security tax, which is a tax levied on both employers and employees to fund the social security programs. Notwithstanding understanding the above, there are cases of tax exemption which cover those circumstances in which an activity or a person does not really bear the economic burden, which by a strict application of tax rules should correspond to them. I hope you enjoyed this unit. You can complete this introduction with the materials available in the platform. See you in the next video.